So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha, and welcome back to The Daily Call. Today we're going to be talking about the differences between selling to close and writing an option contract. Now, there's a very subtle distinction between these two terms or phrases that you have to understand, and it just comes down to understanding who's on what side and what action is being performed. So with regard to selling to close, this would imply that you are first closing a position. If you sell to close something, that means that you might have had something to begin with, and therefore you're removing the position or closing it. So when you see sell to close, that means that the trader had a buy to open as the original position. They were long option contracts. So if you're long option contracts and you performed a buy to open, that means that to reverse that trade, you'd have to perform a sell to close order, which is just a really fancy way of just saying you removed and closed the position. Now, when it comes to writing an option contract, we often refer to, or you might hear the terminology writing, which is synonymous with selling an option contract, and in particular, selling to open an option contract. So when you're an option seller, you would sell to open a contract to begin with, or you would write an option contract, collect a premium, which then obligates you at some point in the future, if your option contract stays in the money at expiration, to buy to close that contract back. So you're just simply completing the trading loop and buying to close the contract back. Now, of course, as an option seller, you can choose to let the option contract expire and become worthless as long as it's out of the money by expiration. So again, a lot of these terminologies and phrases are thrown around, and we just want to, again, do another podcast here to help you understand the differences between these. If you have any questions at all, please let us know. And until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.